It hasn't been long since cryptocurrencies like Bitcoin, Ethereum, Litecoin, and many, many others became mainstream and the public started buying them like hotcakes. The problem is that for some investors, this investment is just too risky and too difficult to access. So in this video, I'm going to talk about some of the safest, easiest, and fastest ways that you can invest in cryptocurrency right now. Back in 2015, one of my clients told me about Bitcoin and cryptocurrency in general. And he was working on a project where they were building on the Ethereum blockchain. And I had no idea what that meant at that time, but I had heard of Bitcoin and I didn't really know what it was all about. So I asked him. And he started to give me a very broad, very simple definition of what blockchain technology really is. And I was really, really interested. So I learned more, and I ended up investing in Bitcoin and Ethereum back in about 2015. And that's where I really got my first experience with cryptocurrency. Honestly, I was really skeptical when I first got into it because, it looked really sketchy. And I didn't want to invest my money there for a long time. It took a lot of convincing, a few months at least. But for any of you who haven't done that basic research to learn what cryptocurrency and Bitcoin is all about, let me just give you the simple breakdown right here. Bitcoin is a currency that is online that was created by a fictional or maybe non-fictional character. Nobody knows really who the person is. There's a name that everyone knows, but that's not linked to a real person. So nobody really knows who created it, which presents another risk, right? What's to stop this person who nobody knows from coming back into the scene and just taking everything that everyone's invested, right? Well, that was my thinking. Then when I learned what blockchain technology really is and what it does and how it protects your investment and how it can save all of the information that's been stored there and other people can't change it, can't block it, none of that. Well, then I started to trust it a little bit more. And after experimenting with it myself, I understood that this is a safe way for us to build for the future. And today we have something called Web 3.0 or Web 3. And this is going to be the entire internet rebuilt on blockchain technology, basically. It's going to be a decentralized way for us to have an internet, and cryptocurrencies are basically a decentralized way for us to have finance and money. Now, my big question was, why does it need to be decentralized? Why do we even need this, right? What's wrong with banks? What's wrong with financial institutions? Well, it's very clear that banks and financial institutions don't really have the customer's best interest at heart, but we can say that about a lot of things in capitalism especially. So moving on past that point, we can also say that the bank is really just a middleman and slows down a lot of processes. With our modern technology, using the internet, you can do a lot of things without banks. So why do we really need them there? They're just taking their percentage and they're just making the whole process slower. And in fact, some people can't get access to credit. Some people can't get access to money when they need it. And cryptocurrency gives them a way to access that credit without having to go through a bank, without having to go through traditional ways. Now, why can't they get credit in the first place? There's a lot of reasons, right? There might be political reasons. There might be personal credit history. There might be a lot of things. But one thing is for sure, there are some people who could take credit and pay it back who don't have access to that option going through traditional banks. So to make a long story short, they reinvented money, put it on the internet. You don't have to use a bank, but you do have to understand something about this technology in order for you to not lose your money. Today, there are thousands of cryptocurrencies. They're going up and down all the time, just like stocks. So for today's video, I want you to think of cryptocurrencies in the same way that you might think of a stock that trades on the stock market. You can buy shares of that stock, and you can buy coins of cryptocurrency. Now, each cryptocurrency is programmed differently. It's written in a programming language, and that's what gives it its special functions and features. The biggest blockchains are the Bitcoin blockchain and the Ethereum blockchain. And the Ethereum blockchain is the one that you really want to watch. That's where people have been using smart contracts, which trigger certain events in the future. This is really a great idea. For example, if you want to give your inheritance, give your money and your wealth to someone else after you die, after you pass away, then you could use a smart contract that triggers these actions, gives this money to that person, and avoids all inheritance tax. Now, I'm not an accountant, lawyer, financial advisor, any of those things. So all of these things are just my opinion. And I don't think that you should avoid tax. You should always pay your tax. I'm a big fan of tax. That's how everything works. So don't try to think that what I'm saying is that you can completely avoid paying taxes. What I'm saying is you won't trigger a taxable event. Now, when you sell a stock on the stock market, you trigger a taxable event. What that means is that you sold it, you got US dollars. Because you got this profit from selling, now you need to pay tax on that. It's called capital gains tax. And we're not going to talk about that too much in this video, but it's an important part of what we're talking about, because if you sell your cryptocurrency for US dollars, then it triggers the same type of taxable event. And it means that you have to now pay tax on the money that you've earned. But there is another situation that happens quite frequently where you sell, but you don't move directly into US dollars. You don't move directly into cash. Instead, you might sell and then buy something that's very similar. Like if you sell your house and then you buy another house. This is called a like-kind exchange. And it means that you can avoid a taxable event. So in cryptocurrency, this works a little bit differently because we have things like USD coin or US Tether or many others that are called stable coins or safe coins. And they're tied directly to a currency. So USDC or USD coin, United States dollar coin, is connected to the US dollar. And it always stays at 1 USDC for 1 USD. Now you might be thinking, Chris, that's just confusing, and why do I even need to put my money into cryptocurrency if I'm just going to buy the equivalent of a US dollar? Why don't I just keep it in US dollars and not take any risk at all? Well, you could do that, but what kind of interest is a bank going to pay you on a savings account? Probably 0.06 if you're lucky. What can you get if you put your money in crypto? Well, there are a lot of really interesting options that we're going to talk about right now. If you've never bought cryptocurrency before, then you might be completely lost. You might be thinking, what's the first step? How do I get into this at all? Well, there's two ways that you could do it. You could set up a wallet for each of the coins that you're going to get, and then hold those coins in that wallet and remember the secure passwords, the passphrases, or whatever else helps you get into that wallet. This is the most secure way to do it. Now, it's secure, but it's slow and it's not very convenient, because probably you want to have a diverse portfolio and you don't want to hold each of those things in a separate wallet. You want to be able to trade them, to sell them quickly, and you want to be more liquid. So probably what you're going to do is hold your coins on an exchange. Now, there's a lot of them out there, but today I'm going to tell you about 3 different exchanges where if you hold your coins in their wallets, they'll actually pay you a percentage for holding it there. So it's like earning interest in a savings account, or it's like earning dividends from holding stocks. Both of these metaphors or comparisons apply in this case. So it's really an interesting thing for us to look at, because we can just put our money there and let it grow. And to be clear, this is a completely different investment strategy. Some people invest in stocks because they think that the stocks are going to go up in value, and then when they sell, they'll get more money than what they paid for them. This is called investing for gains. And when they sell at a higher price, they trigger a taxable event, which is capital gains tax. Just like when you sell your house at a higher price or any other asset. But there's a different way that you can invest in stocks, which is dividend investing. Those companies will pay you a small percentage throughout the year, and you get that on top of the value of the stock. Now, that doesn't mean that it's always going to be better to invest in dividends. It's just another strategy that you can take. And some companies capitalize on the strategy by offering a higher dividend yield. When we come back to cryptocurrencies, we don't get dividends from holding coins, but we can stake our coins, which means that someone else can use them, and our coins can be relatively safe at the same time, and we collect a percentage. So it's like earning interest, or like getting paid a dividend. The first place that I recommend buying cryptocurrency and holding your cryptocurrency to earn a percentage is the mobile application called Voyager. There's a link under this video, and when you join, you'll actually get $25 worth of Bitcoin on your account if you use my link to join. So the link's under the video. Now, why do I recommend this one first and foremost? Because I found that a lot of different places offer a lot of different crazy percentages, and Voyager has a safe platform. They're FDIC insured, and it makes me feel a lot more confident that they have all of these safeties in place. I mean, let's be real, in the crypto world, anybody can get hacked, and it doesn't mean that Voyager is going to be the safest or even the best option out there. But in my experience, this platform offers a good return and a safe way for you to invest your money. They don't offer the highest percentage of anyone, but they offer a reasonable percentage. So on Voyager, you can actually get a 9% APY on your USD coins. That means that you can buy USD coins with your US dollars from your bank account. They have a linking application that makes it very easy for you to send money from your bank into the app, and you can buy USD coins, which are $1 to $1. So it's exactly the same price. So let's imagine that you buy $10,000 worth of USDC. This means you have 10,000 USDC in your account now. What's going to happen is every month, Voyager is going to pay you 0.75%, and you will get that paid back to you in USDC in your account. You'll be able to see it. It's been added there. And what you do next is your business. You can withdraw it back to your bank account, or you can keep it in there and it will continue to grow. Now, why 0.75% when I said 9% before? Well, 9% is the APY, the annual percentage yield. So if you break that down into a monthly yield, that would be 0.75%. That means if you put $10,000 in, you'd get $75 back every month. So you might be thinking, why would I put $10,000 in just to get $75 back? And if you're thinking like that, then maybe the strategy isn't for you, because what we're doing with this strategy is just earning a 9% annual return, and 9% is pretty good. Now, another mobile app and website that you can use is called crypto.com. And when you join with my link under this video, you'll actually get $25 worth of CRO, which is their official coin for crypto.com. And you'll be able to use that to buy dollars or something else that you'd like. Now, if you join using my link under this video, then you'll get $25 in CRO when you sign up. And CRO is the official coin of crypto.com. They have their own coin and everything. And they also have a really cool feature that I like and I suggest using if you decide to use crypto.com. They have a 30-day period where they waive all credit card fees. So you can buy cryptocurrency with your credit card without paying an additional fee. It's great. It's a great way to get started. Right now, crypto.com is offering 12% APY for USDC. That's USD coin. That means it's a higher percentage than Voyager is offering. And you can actually access up to 14% APY if you hold enough CRO in your account. So if you hold a large amount of their coin, then they give you additional bonuses. They'll also give you a debit card or credit card that you can use from their company. And if you hold $400,000 of CRO over a 6-month period, then this card will give you 8% cash back on all spending, which is amazing. I mean, if you spend $1 million on your business in 1 year, you could get $80,000 back. Now, most people are thinking about doing this on a personal level, not on a business level, but just think about how you could use it if you had that level of spend. The third platform I want to mention is Coinbase. Coinbase is one of the oldest names in this game. They were one of the first companies to really officially be able to do business in the United States, to get blessings from all of the governmental offices that they needed to. And so they've been in the position of being a very trusted entity in this space. Now, when I say trusted, I mean in a centralized way, right? The government trusts it, so people trust it. But in the world of decentralized finance, in the world of cryptocurrencies and blockchains, people tend not to trust things that are centralized. All of these exchanges that I'm telling you about today are centralized exchanges, which kind of defeats the purpose of using a decentralized currency, right? Coinbase is very similar to banks, and it only offers a 0.1% APY on USDC. So it's not very advantageous to hold your money there in Coinbase compared to Voyager and crypto.com. But if you're really worried about safety, this is probably the safest option out there. And if you join with the link that I've posted under this video, you'll get an extra $10 in Bitcoin added to your account. Now, in this video, we discussed a lot of different options, and I've even given you 3 places where you can buy cryptocurrency, start investing, and earn a percentage on that. But it's really important to remember that you shouldn't invest in any assets that you don't understand. And in fact, there are many websites that will pay you small amounts of cryptocurrency just to learn more about how cryptocurrency works. It's amazing. But there's much more to investing than just percentages and gains. You have to think about risk, and you have to know what you're doing. So that's why I implore you to learn more about cryptocurrency and to get into this as an investment. This is probably the future of money, so it's good to get a head start and learn about it now. Thanks for watching this video. Make sure you press like, press subscribe, leave a comment down below, and I will see you in the next one. Bye-bye.